Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, and regulatory landscape and capital markets. I'm your host, Jill Malandrino, and joining me this afternoon, we have Russell Rhoads, Associate Clinical Professor of Finance at Indiana University, and Dan Deming, Managing Partner at KKM Financial. We're here to discuss a pattern that's occurred 5% of the time since 2001 and whether it serves as a bullish or bearish signal. It is great to have the both of you with us today, certainly our resident volatility experts on a day that, Russell, Dan, this conversation could look very different even just an hour from now, right?
Sure.
Some of the moves that we've
Yeah.
seen, Russell, even in just the VIX alone today, have, I guess, remarkable is the word.
Yeah, no, that's remarkable is an understatement. A little off script, but there's actually a new short volatility ETP that got halted just because it doesn't have a whole lot of liquidity and had a big move when that headline grabbing thing came out this morning that boosted the market for if you blinked, you missed it. But yeah, there's a lot of uncertainty out there, a lot of volatility in intraday. And the volatility indices at very elevated levels are pricing in 3% and 4% days right now.
Yeah, Dan, I mean, it's interesting. I think you noted in your notes there that 3% is the expectation, but it's incredible to me how one moment we're talking about make sure you buy protection, and the next moment you're thinking about, oh, perhaps we could sell puts with volatility is elevated. I just heard a segment on it. It is the conversations that are being had in the intraday session are, I just don't think we expected this when we spoke a month ago.
No, the market was definitely underpricing the prospect of this up until really probably Friday. And again, it was kind of the feedback loop within the options, activity leading up to this, as far as even though we did see the market down about 10% in the middle of last week from where it had been, vol was still very compressed. And again, I think that's because of some of the dynamics with the zero-day options and other things that are in the market. But now, as we broke down and the significant increase in intraday volatility, as you pointed out, Jill, yeah, I mean, we see a VIX around 48. That in general implies about a 3% move expectation on any given day. We're seeing that even outside of that here the last several days. And then intraday today, we did see a 7% move from bottom to peak in probably 15 minutes. So that's going to keep vol elevated for some time.
Yeah. And Russell, I know you're always comparing the VIX to futures and other markets. And there's something that you noticed with VIX and how it closed relative to the VIXN, the NASDAQ one, the NASDAQ volatility measure. What's interesting about that? Because it's only happened 5% of the time since 2001. What does that indicate?
Sorry, I kind of went off on a tangent from the first beginning there on you. But one of the things that I've always looked at is, the NASDAQ Volatility Index, the Russell 2000 Volatility Index, and VIX. And typically, VIX is at a lower level than the other two markets that I just mentioned. In fact, with respect to the Russell 2000, it's very rare that VIX is at a premium to the Russell 2000. It happens about once every 20 trading days, but it tends to happen in clumps with respect to VIX and the VXN, or the NASDAQ Volatility Index. And the thinking there is the S&P 500 is a truly global index. Well over half the sales for the S&P 500 come from outside of the United States. And you can think of VIX as a global volatility indicator. If you're trying to hedge against some sort of macro move lower, like we're seeing right now, probably the most liquid, one of the best markets, it's not going to lock up on you, is going to be index option markets in the US. So one of the things that we do see in periods of true fear, we will see VIX close at a premium to the NASDAQ Volatility Index. And we saw that last Friday. As you mentioned, that's only happened about 5% of the time in this decade, or I'm sorry, in this century. Wow, say century.
Yeah.
And what I did was I took a look at, well, what happens after? About 60% of the time, the NASDAQ 100 is higher after there's more fear in the S&P 500 than the NASDAQ 100. And cumulatively, it comes to a little bit over 10,000 points. It's Mr. Buffett always says he wants to buy when the sharks are smelling blood in the water, et cetera. And I think one of those volatility indicators that shows that is when VIX is at a big premium relative to the other volatility indices that are usually at a premium to VIX.
Yeah. And Dan, and you noted as well that VIX futures are trading at a heavy discount to cash, and they're also in backwardation. So explain to us, what the significance is and what that potentially indicates.
Well, what it indicates, Jill, is that the concern, I mean, the volatility has been pushed towards the front end of the futures complex because of the fact that we are realizing this very large intraday swings. And so the risk right now in the vol space is predominantly on the short end of the curve. And that's why you're seeing those futures trading in backwardation, where that front month future, even the second month future, are trading higher than the further back months, because the expectations are that vol will calm down over the next 60 days or 120 days or whatever it might be, but currently certainly in a high vol regime. And so that indicates that, yeah, there's a substantial uncertainty, concern, price swings, and also you're seeing some of the leverage coming out of the market. You're also seeing, again, that mean reversion. I think that's having a big impact on some of these hedge funds who probably are a little offsides on the Mag 7 versus the rest of the market. And all these things are culminating in what we're experiencing now. And I want to point out something that Russell brought up, because I think that's really important, what he brought up about the dispersion between the VIX and then some of the other vol indexes of the other major indexes, is the idea that Friday, it was a washout day. I mean, if you look at what was sold, everything was sold Friday. Even Thursday, you had consumer staples, you had utilities, things like that holding up. Friday, everything went, and that's why we did see the VIX go above some of those other, what are typically more volatile indexes. And that's an indication from a capitulation standpoint, whatever you want to call it, that we did see quite a thrust of deleveraging on Friday. Now, can we still go lower from here based on some of the news items? Certainly, but at the same time, that's a very interesting observation, and it certainly indicates that we did see a substantial flush in positions on Friday.
Yeah, and then Dan, of course, we're coming into earnings as well, right? And now we're going to start talking about, how corporates are responding, what their forward guidance looks like, how this is translating into fundamentals. There's not going to be much wiggle room or forgiveness in this market, even with valuations and prices depressed. At this point, I would imagine from an operating perspective, it's going to be challenging to, figure out how tariffs could or could not impact you. And I think even if we were to get some sort of a definitive answer that this type of leverage play, as the administration sees it, is something that could be continuous throughout the next 3+ years.
Yeah, is that from Russell? I want to say,
for you, Dan, I'm sorry. Yeah, I was.
Yeah, no, that's fine. Yeah, absolutely. And that's right. Trying to provide guidance, provide again what the earnings are going to look like here in a couple of weeks, and what the potential impact is longer term. Yeah, there's a lot, again, that's creating this uncertainty and exacerbating some of these moves, because there is still so many unknowns as to how this is going to impact not only economic activity, but earnings and also guidance. And so, this is going to be a very challenging time for all parties involved as far as trying to decipher what the impact's going to be, where they're going to be the strategic advantages, and again, what valuation is going to be compelling for the overall investing community to be able to find a foundation in this market.
Yeah, and Russell, the charts and patterns that you look for, while you're back testing or looking for historical trends and what that could potentially mean for the future, it feels as if this volatility regime, I don't want to say it's different than the last time, but it was identifiable. We knew, okay, it was financial crisis, dot-com boom. When there's debt issues back in 2012, 2013, going through the pandemic, there was something identifiable and there was a way to kind of get out of it where we all had the same goal. It feels as if even the volatility complex isn't quite sure what this new regime is going to look like. It's different day to day. You have policy being dictated on social media, and sometimes the administration and President Trump aren't necessarily on the same page.
They keep calling this a trade war, and so I'm gonna use a war analogy here. Often when they'll take a look at leadership during times of war, and they'll say, well, what the heck does victory look like? I mean, victory, and you could take the Ukraine-Russia situation. I probably could have a situation where both of them say that they've got, that they had victory or came out of it okay. I would love to hear from the Trump administration what they think victory looks like with respect to this. What do they, and if they were to give us some of that type of guidance, that might help the markets determine, are we closer to having this behind us or not? Right now, it's just an open-ended conflict and with no potential resolution. I mean, even during COVID, we had a pretty good idea as to what victory against COVID would look like. We'd be back at work. So I think that's one of the issues here. It's not necessarily how haphazardly the information's coming at us, but in addition, what is, give us your end goal and tell us, and maybe you don't want to share what a victory looks like, because then it can be pointed out that you didn't get there.
I mean, that's a good point as well. And I'm sure, whether it's a Trump administration or, administrations in general, you're kind of always playing chess.
Yeah.
Right.
Yeah.
Absolutely. Yeah. I mean, I follow up on that. I think you're right, Russell. And Jill, right. Yeah. What is the end goal here as far as, initially it was to try to stem some of the illegal drugs and things like that. But now it just seems to be a great deal of confusion as to what is victory or what is the end goal of all this. I mean, the balance of budget, but then you're also ferreting out, inefficiencies in DC, and there's just a lot of moving parts. And finally, the dam broke last Wednesday when that chart came out. And, that's really caused this massive shift in the vol regime. And that's why you continue to see this unfold as it is, because prior to that, the market had greatly underpriced the potential impact of these tariffs, and if they came to fruition. And now we're seeing the fallout because leverage, long short, some of the other things, the mean reversion that's unfolding, all these things are really magnified right now. And that's what has really caught this market to some degree off guard, which was amazing given the fact that I think there was a lot of concern these last couple of months that there was going to be some volatility, but not this magnitude.
Yeah, I mean, we've said it on the show a number of times, if you were benchmarking 1.0 and knowing that economic and market performance was, one of the most important measures, that the administration had, I think we came into 2.0 with that expectation, because that was really how the first 1.0 had measured their success. And there were times within those 4 years where the economy and the market did perform quite well. And some of the policies did make sense. And, there's questions around the execution. But I think, I'll be the first to admit it myself. There was that exuberance coming into it, thinking that the benchmark would look the same. And I would, I'm pretty confident in saying, I don't think anyone envisioned, or not many people envisioned, this kind of scenario.
Right.
Yeah. Nope.
I agree.
No.
And fair forever, and I did not expect all of this. So
yeah, well, we'll see what the conversation looks like next first Monday of the month when we meet. Appreciate both of your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.